Welcome back to the third season of Speidel's Federal Tax Minute. I'm your host, Catherine Zidane, the editorial director at Speidel, and this week we're covering two avenues still available for taxpayers who missed the Employee Retention Credit Voluntary Disclosure Program. We'll be covering this topic in our upcoming quarterly federal tax update webinar on April 24th, and you can see a list of topics covered and get registered at speidel.com under webinars. The IRS's Employee Retention Credit Voluntary Disclosure Program closed on March 22, 2024, and was not extended beyond that date. The ERC VDP allowed taxpayers that filed ERC claims and received their refunds to repay 80% of their ERC and receive various benefits, including relief from penalties, interest, and IRS audit. The program was designed for taxpayers that received ERC refunds but didn't actually qualify for those refunds. Taxpayers that applied for ERC refunds and that after further review don't think they actually qualified still have two avenues of relief: the ERC withdrawal program or amended returns. If a taxpayer hasn't received their ERC refund, or they received a refund but haven't cashed the checks yet, the taxpayer can still use the IRS's ERC withdrawal program. Taxpayers are eligible to withdraw if they meet all four of the following requirements. The taxpayer made their ERC refund claim on an adjusted employment tax return, so Forms 941X, 943X, 944X, or CT1X. The taxpayer filed their adjusted return only to claim the ERC and made no other adjustments. The taxpayer wants to withdraw the entire amount of their ERC claim, and the IRS has not paid the refund claim, or the IRS has paid the refund claim but the taxpayer hasn't cashed or deposited the refund check. Each payroll quarter is considered a separate claim, so a taxpayer can withdraw for one payroll quarter but not the next. There's nothing preventing taxpayers from amending payroll returns to remove ERC refund claims and repaying any amounts already received. However, unlike the ERC VDP that allowed taxpayers to repay only 80% of their ERC received and provided penalty and audit relief, taxpayers that amend their income tax returns are required to repay their entire claim, plus penalties and interest, and they do not receive audit relief. Taxpayers that amend their payroll tax returns to remove ERC claims and repay any ERC refunds received don't really face any statute of limitations issues for their amended payroll tax returns. The IRS's 3-year statute of limitations applies to refund claims, but amended tax returns that add additional tax liability don't have a 3-year limitation. The statute of limitations becomes a problem for taxpayers that already reduced the deductible wages on their income tax returns by the amount of the ERC claims, and then later want to restore their wage deduction after receiving a denial of their claim or that voluntarily repay their claim. Taxpayers in this situation have to amend their returns and make their refund claims before the statute of limitations expires. The last date taxpayers can file an amended return and claim a refund is generally the later of 3 years from the date the taxpayer filed their federal income tax return, or 2 years from the date the taxpayer paid the tax that is the subject of the refund claim. The statute of limitations for refund claims depends on whether the taxpayer filed an income tax extension, when they paid their tax, and whether the taxpayer's due date is affected by a presidentially declared disaster. The May issue of Speidel's Federal Tax Letter has a longer discussion of this topic, including practice pointers and a comprehensive example. You can get details on this monthly publication and subscribe at speidel.com under Publications. That's all for this week. Join us next time for another episode of Speidel's Federal Tax Minute.